What if I told you that one of the biggest AI opportunities today might not be Nvidia? While everyone is focused on AI chip makers, Meta platforms could be quietly building the world's most powerful AI ecosystem. Wall Street analysts currently have an average price target of $822, representing roughly 45% upside from current levels. Some analysts are even forecasting Meta could reach over $1,000 per share. So the big question is Meta stock a buy right now, or is the AI hype already priced in? Let's break down the technicals, fundamentals, growth opportunities, and risks to find out. Meta Platforms is the parent company of Facebook, Instagram, WhatsApp, Messenger, Threads. Together, these platforms serve billions of users worldwide every month. Meta isn't just a social media company anymore. Today, it is becoming an AI infrastructure company, an advertising technology leader, and potentially one of the biggest beneficiaries of the AI revolution. Let's start with the chart. Meta stock is currently trading around $567. The stock previously reached highs near $800, but has recently experienced a significant correction. First, the stock is sitting near a major support zone between $550 and $570. Historically, strong buying interest has appeared around these levels. Second, analyst sentiment remains extremely positive. The average Wall Street target is around $822, while the highest target sits at $1,015. That's nearly 80% upside potential. However, there are risks. Meta remains in a short-term downtrend. If support around $550 breaks, the stock could fall toward the $500 area before finding stronger support. For short-term traders, volatility should be expected. For long-term investors, this correction may present an opportunity. This is where the story gets exciting. Meta is investing tens of billions of dollars into artificial intelligence. CEO Mark Zuckerberg has made it clear. Meta wants to become a global AI leader. The company is investing heavily in AI data centers, advanced AI models, custom AI, chips, AI-powered advertising, Meta AI Assistant. Most investors underestimate how important AI is for Meta's business. Meta's AI tools help advertisers target customers more efficiently. Better targeting means better advertising results. Better results mean companies spend more money on Meta's platforms, and more advertising spending means higher revenue. It's a powerful cycle. Meta's biggest advantage is its massive user base. Billions of people use Facebook, Instagram, WhatsApp, and Threads. No matter what happens in the economy, businesses still need customers, and Meta remains one of the most effective ways to reach them. AI is making Meta's advertising platform even stronger. The company continues to improve ad performance through machine learning and automation. This gives Meta a major competitive advantage over smaller rivals. Another reason investors love Meta is its financial position. The company generates enormous cash flow every year. Unlike many AI startups burning cash, Meta has the resources to invest aggressively while remaining highly profitable. This financial strength allows Meta to build new AI infrastructure, repurchase shares, invest in future technologies, survive economic slowdowns. Few companies have this level of flexibility. Of course, no investment is risk-free. Risk 1. Meta is spending billions on AI infrastructure. If these investments fail to generate returns, profit margins could suffer. Risk 2. Governments worldwide continue to scrutinize social media companies. New regulations could impact future growth. Risk 3. Meta faces competition from TikTok, Google, OpenAI, Microsoft, other emerging AI platforms. The AI race is becoming more competitive every year. So, is Meta stock a buy? Here's my view. Short-term outlook, neutral to bullish. Investors should expect volatility as markets react to AI spending, economic conditions. Long-term outlook, bullish. Meta combines massive global reach, strong cash flow, AI leadership potential, dominant advertising business, attractive analyst upside targets. My long-term fair value range is between $820 and $1.00 plus per share, depending on how successfully Meta monetizes AI over the next few years. If you're looking for a high-quality AI stock beyond Nvidia, Meta deserves serious attention. If you enjoyed this analysis, make sure to like the video, subscribe to the channel, and comment below. Do you think Meta can reach $1,000 per share, or is Wall Street too optimistic? Thanks for watching, and I'll see you in the next video.